Hello and welcome to Crypto Bible. My name is Oliver, and in today's episode, we're going to cover some articles that I think are pretty important and interesting, all about the rules on crypto tax in the UK and the US. Now, before we get started having a look through these articles and the new laws, hey, throw me an early like, get yourself subscribed to Crypto Bible, and don't forget to turn on the notification bell so you never miss any of our upcoming new content pieces. Right, first things first, let's go on Coinmarketcap and check out what the market is doing. Okay, so here we go. Now this is interesting. Trending top 3, Axie Infinity. We've heard and we spoke about that quite a bit, and we did an episode about Axie Infinity a while back saying that they're making changes. So it's very interesting to see them at the top of the trending coins. Then we've got Elvantis, Green Chart in number 3, and then the biggest gainers, Catcoin, Devil Finance, and Spaceship Milk 2. Coming down, I see a lot of green. Now, it's only a little adjustments. Bitcoin here up 0.7%, trading at $44,078. ETH up 1.31%, trading at $3,134. What have we got? XRP 0.3%, Solana 0.5%, Cardano 1.15%. So we're in the green, but just. Let's get on to the UK tax article and have a look at this. Okay, here we go. It's from CoinDesk. It says UK crypto tax guide for 2022. Now, some of the terminology in this article is very interesting. The choice of words that they've used. UK citizens that invested or dealt with crypto over the last year may be required to pay taxes on their trade. May be required to pay taxes on their trades. All depends on obviously how much. Now, here's what you need to know. So in the United Kingdom, tax season starts on April 6th and runs until April 5th of the following year. If you're submitting a self-assessment, you might have to pay some of your bills by July 31st. While the dates might be easy to remember, UK tax advice around crypto can quickly become complicated. Like many jurisdictions, Her Majesty's Revenue Service, the HMRC, did not create new laws to tax crypto assets. Instead, this is interesting, HMRC since 2018 issued guidance on how to wrap the existing tax code around crypto. And its guidance outlines how cryptocurrencies are not considered currency or money, but property. So you would pay the same gains tax that you would if you owned a house or other type of property. The advice has been updated several times since then, and March 2021, they've compiled its advice into a manual. So 2022, Tax Department shed light on how to report taxes on decentralized finance, staking, and lending. So using the HMRC's advice, it's your unenviable job, or more likely your accountants, to determine the tax liabilities created by events like mining, trading, and complicated DeFi protocols. So for individuals as opposed to businesses like freelancers and contractors, the UK tax guidance for crypto is split between capital gains and income. Wherever you take money from selling crypto, so that's important, from selling crypto, so they're not saying anything yet about holding it, it's likely that they're going to charge you for capital gains taxes, just like how you pay taxes on profits from stock trading. If you've earned crypto from activities like working for a decentralized autonomous organization or from mining, you'll pay income tax and national insurance on your profits. If your total income or capital gains for the year are below certain thresholds, hey, you might not have to pay any tax. And you don't have to pay any taxes for simply holding crypto. Well, that's good to know. So as long as you hold your crypto and you're a hodler, diamond hands, then you're not going to pay any tax. It's only when you sell. So when you sell, that's when they want to tax you. So when do UK citizens have to pay tax on crypto? Buying and selling crypto. If come tax day, you've sold your crypto for more than you bought it, you'll probably have to pay capital gains tax on the profit. If you lost money through the trading, such losses could minimize your capital tax bill. So note that swapping cryptos will also trigger a capital gains taxable event. What? as it involves selling your crypto, okay, to other investors or liquidity pools. Okay, so even if you swap, there's still some gains there if you've made it. In exceptional circumstances, such as if you're trading huge amounts of crypto, the HMRC will consider you a trader and ask you to pay income tax on trading instead of capital gains tax. When you're paid in crypto, no matter what crypto you are paid in, who pays you, you'll have to pay income tax and national insurance contributions. Mining and validating, if you're a mining operation, you're a miner, one computer that mines Bitcoin in your spare time, HMRC will treat you as a hobbyist who should pay income tax on your gains. If it looks like you're running a mining business, count your mining income toward your trading profits. Airdrops are not taxed as income, so long as you receive them without doing anything in return, and as long as you don't receive them as part of a trade or from mining. If you've earned airdrop tokens as a reward for doing something, you'll have to report it as income. When an individual sells their tokens, that will likely trigger another capital gains taxable event. Crypto you inherit. Under UK tax law, the HMRC treats cryptocurrencies as property. DeFi protocols, DeFi tax get a little complicated and each protocol is different. If you lend or stake your tokens, the HMRC treat it as capital gains disposal. Even though you control the token, that's unless you know the return when you started or lending, then it's still revenue. If the DeFi protocol pays you its income, various other factors like when your returns are paid as a one-off, probably capital gains or recur income, and whether the loan is long-term or short-term affect how DeFi is treated under UK law. Right, how much crypto tax do we pay in the UK? Let's have a look. So, if you will report the money you made from crypto's income, it will count towards your income tax. Bands range between 0% and 45%. We can see below England, Wales, and Northern Ireland. Scotland adds another 2 bands, 19% starter rate and a 21%. So we've got taxable here, 0 to 12,570. We get that, like, I was going to say free. We were earning that. That's our allowance. Then anything above that, from up to 50,270, is 20%. And then anything above that, 150,000 on the graph, 40%. And obviously, if you're one of the lucky ones that earns, a hard worker even, that earns over 150K, you're 45% on top of that. Right, okay. So it's weird because they're taxing you on your money you've earned, and then again the money you've earned you're putting into crypto, they're taxing it again, but it's already been taxed on the money you've earned. Come on, what are your thoughts on that? So you'll also have to pay national insurance. UK social security part national insurance changes to whether you're employed or self-employed and how much you earn, and the tax ranges from 2% to 12%. For capital gains, the pound, the 12,570 is tax-free for everyone. That's like our allowance. If you pay a higher rate of income tax, you'll pay a flat fee of 20% on gains thereafter. If you pay a basic rate of income tax, taxes depend on how much you've earned with your capital gains. Right. So to work out how much you need to pay, take your total taxable gains and deduct your tax-free allowance of 12,300. You'll pay 10% gains within the basic income bracket and 20% tax on figures greater than that. How to prepare for crypto tax season. Keep track of all your wallets and record in which protocols you've staked money. When trading, make sure to keep enough money aside to fulfill your tax obligations. Remember the value of crypto in terms of GBP, Great British Pound, when you report your taxes. Set calendar alerts for tax day and give yourself enough time to prepare. Consider hiring an accountant. Crypto taxes can quickly become complex, particularly for novel DeFi protocols, and accountants can help you save money and avoid fines. If you're registered as a sole trader, accounting costs are marked as a business expense too. Look at crypto tax software. Coinly, Token Tax, and Coin Tracker are among the more popular sites that help you stay on top of your crypto taxes. They could help you scrape data from exchanges and DeFi protocols and calculate your final tax bill. They can't replace accountants. Submit your tax self-return assessment this needs to go directly to the HMRC and can be done online, or have your accountant submit it on your behalf. Right, okay, so there we go. What do you guys think about that? Let me know all your thoughts about if you're a UK resident, and is it going to keep you holding your cryptos longer because you know that as soon as you sell them, you're going to have to pay gains tax on it? Let me know in the comments below. Let's move on to what the tax looks like for US residents. Okay, so here we go. This is US Crypto Tax Guide 2022. It's getting that time again when the IRS is looking for its pound of flesh from crypto investors. Any US citizen that dabbled in crypto in 2021 now expected to file a tax return to the IRS, Inland Revenues Service. Taxpayers can file their taxes between Jan 24th and April 18th, with penalties issued for submissions made beyond the deadline. So cryptos, and including NFTs, continue to be treated as property for the purposes of tax in the US. Originally decided by the IRS in a note published in 2014, means that a majority of taxable actions involve digital assets will incur capital gains tax treatment similar to how stocks are taxed. Cryptos receive from selected activities, however, are treated as income and therefore subject to income tax treatment. So this guidance around taxable events has become murky over the last year, largely due to new activities related to decentralized finance. So when do US citizens have to pay tax? So selling cryptocurrencies for fiat, US dollar, Japanese yen, etc., they have to do it when sending cryptos as a gift, anything over $15,000 for the 2021 tax year, purchasing goods or services with crypto, even small purchases like buying a coffee, trading or swapping one digital asset for another. This includes NFTs using cryptos. Now, it's worth noting you only owe tax on capital gains you've made from these events, not the full amount of disposed assets. This is calculated in the difference between the price paid for the asset and the price it was sold at. The IRS has not yet provided clarity on whether minting tokens, including creating wrap tokens publicly, minting NFTs, or minting interest-bearing assets creates a taxable event or not. It's also not clear at this stage whether depositing or withdrawing liquidity from DeFi liquidity pools using a liquidity provider tokens is considered a crypto transaction. Professional guidance should be sought if you've dealt with any of these assets or processes over the last year. A little bit hazy on that part. Income tax events include receiving crypto from an airdrop, any crypto interest earnings from DeFi lending, crypto mining from block rewards and transaction fees, crypto earned from liquidity pools and interest-bearing accounts, receiving crypto as a means of payment for carrying out work, including bug bounties. Interestingly, the tax laws surround crypto earned via staking remain unclear. For the most part, many report as a mining income. However, there's an ongoing case that the IRS for staking rewards to be taxed only when they're sold and not when they're earned. The argument put forward by the plaintiffs in the case asserts newly created property, such as furniture or manufactured goods, is usually taxable at the point of sale. They believe this same principle should be applied to newly minted tokens received from staking. Losses incurred from trading can be used to offset your capital gains, as well as deduct up to $3,000 of your normal income tax, depending on how long you've held the assets for. We'll see that below in a moment. Any additional losses can be carried forward to the next year. You do, however, have to show a loss across all assets in a particular class to qualify for a capital gains reduction. How much crypto do you have to pay in the US? Calculating how much you have to pay is based on how long you've held the assets prior to disposing of them, as well as which income tax bracket you fall under. So it's divided into two parts. Short-term capital gains tax. Profits from a crypto held less than a year are taxed at the same rate as whichever income tax bracket you're in. Any losses can be used to offset by a maximum of $3,000. So short-term capital gains tax rates 2021, we can see here. So 10% up to $9,950, and you've got your married couples filing jointly, and then head of household. Then it goes from 10%, 12%, 22% from the values you can see here on the screen, all the way up to 37% with those. Then we've got long-term capital gains. For crypto assets held for longer than a year, the capital gains tax is much lower, 0%, 15%, or 20%, depending on individual or combined marital income. Long-term capital gains. So here we go. Single, so 0% up to $40,400, 15% from the 40,401 to 445,850, and then you've got 20% over 445, and then you've obviously got here married, filing separately, and head of household with your rates there of the percentages. How to prepare for the US crypto tax season? Again, so it can be an arduous process, but if you've never done it before, the first step is most important and the most time consuming of the filing, collating all of your crypto activity. For some, this might involve logging on 1 or 2 trades. More experienced investors who have dabbled in NFTs, yield farming, airdrops, and other types of crypto trading, it could be a monumental task. So it's usually advisable to keep track of your trades and go along throughout the tax year to prevent having to do it all in one go. Now, once you've done this first step, you can calculate any capital gains and losses you have. There are a number of platforms that can do this for you, and some offer free trials. From there, you need to fill in your 8949 form and add it to Form Schedule D. Any crypto assets earned and income need to be added to Schedule 1, Form 1040. And self-employed earnings from crypto need to be added to Schedule C. Finally, submit your forms and pay whatever amount of tax you owe before the deadline. So there you go. We have had a look at those articles from CoinDesk about the tax laws for the UK citizens and the US citizens. What are you? Are you from the UK? Are you from the US? Let me know in the comments below. Maybe you're from somewhere else, and maybe your government isn't taxing your crypto yet. But let me know what you think about it. Of course, some of us, or one might say, that's a little bit fair. You know, we've earned that money, it's already been taxed, and then they want to tax it again, and then want to tax it again, and so forth. But it's interesting. It's important for us to know, for those of us that are just getting into crypto or are already in crypto for a while, and we need to know, you know, what to do and what's going to happen with the gains tax. So thanks for watching me for today's episode. I hope it's been helpful for you. Let me know what you think in the comments below. Throw me a like, get yourself subscribed to Crypto Bible, and turn on your notification bell icon so you never miss any of our upcoming episodes. Once again, thank you for joining me for today, and I'll see you on the next one.